Welcome back, everybody. Let's keep going with the gold market analysis. So today we start speaking directly on the technical background, trading plan. Since we do not have any big news in the recent couple of sessions, mostly you can see market stands in a tight range, as well as in the forex market, the same situation as we said in today's euro currency video. So the one actually concern that we had yesterday, and actually it still exists, is about this grubber. So actually it has been formed. We have seen it on the Chicago Mercantile Exchange chart. Currently, about this grubber have two actual moments. First, in general appearing of this grubber after such an action and without any reasons, I mean some fundamental reasons, news releases, statements from the big persons, it seems a bit irrational, at least from the technical point of view. Market is not at some other body, it's not at some big resistance. Yes, 33.73 is a fib level, but in the current circumstance, if we would take into consideration the background, what was the reason for this action, it's not quite reasonable. Today, this pattern is becoming a bit weaker, because yesterday you can see that market maybe hasn't closed above the top of the grubber, but mostly it closed above this body. You can see, and well, based on the performance yesterday on intraday charts, it also seems that more probable that this grubber will not work. If, of course, something extraordinary will happen, some news will be released, or I don't know, Donald Trump will tweet something. Only maybe by some external impact that could happen. But based on the technical picture, I would say that currently this pattern brings less concern and more probable that it should be cancelled maybe by some upper performance. Daily trend turned bullish, which is great. And in general, if you take a look at lower time frames on the full time frame chart, you can see when the grubber starts working, it's very soon have been reversed. So market is not falling to this big drop because the grubber potentially has to lead market back to the lows. You do not see it. Vice versa, you can see that action is being reversed once market reached the 30% support. This is also not typical for the patterns of such a scale, when it actually suggests really big drop, but market suddenly stops and on some intraday support and shows upward action, which is actually even more stronger than the downward one. At the same time, here is one thing to mention. Yesterday on this performance, when actually market has reached this 30% support, 33.54, it actually was not bad trade, not bad opportunity for position taking. You can see nice acceleration up here, but take a look that market has not used this pattern, this acceleration to keep going higher, even when the price already was above the 33.73 area. It means that something is holding the market, or it has not enough power to just break it up and keep going. So that's the thing that we should also keep in mind. In the current circumstance, you can see some kind of the consolidation is forming here, which is, I don't know whether it will last for long or maybe will be broken very soon. But divergence also stands on the hourly chart. But in the current circumstance, guys, if you still do not want to wait for 33.30, 33.40 area that we discussed as a confidence, maybe it will be really more solid to consider entry on the long side. If you would like to take the position here, it's not really a bad idea, because in general we expect something like this on the forex market. We expect upward continuation on the euro, as we said today in the video. But if you still decide to buy here, better to cut your trading lot. Do not take the whole lot here. Take some part, not more than the 30%. If market still will show the breakout, that's great. You will have at least a fraction of your normal lot and you will take part in this trade. But if market will collapse, which is more important to save and preserve your wealth, it's better to add more lates on some more reliable and stronger levels. Maybe some patterns will be formed there. So in the current situation, I would say it's 50-50, whether the market will keep going higher here or will show deep retracement. Currently, at this point, either on the hourly chart or on the 4-day frame chart, we do not have clear signs on any direction, not see clear signs that market intends to break it up and keep going. and we do not see yet clear signs that retracement should be really deeper. It's definitely deeper. So just by some cross-market analysis based on the performance on euro, for example, it seems that gold also could follow to this. That's the reason why we said that maybe if you would like, so you could try to take small part of your position here. If not, if you're a conservative trader in the current situation, I would prefer to wait either for clarity, when we will see some more signs, more evidence on any direction, or at least for some bigger levels, such as 33, 35 on average is conference support that we have. That's our 2 cents on the gold market right now. Let's keep watching, and see you tomorrow.